You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, gold price is down, stock price is down. We're getting down to low 1800s in gold as we speak now. It's May 12th, and the price of gold is down on the spot, $18.24. Silver is getting down to $20. This wasn't supposed to happen. And let's talk with our good friend Jordan Roy-Byrne and find out exactly what's going on here. Jordan, welcome back. So the Daily Gold, your platform for explaining various movements in the market, what is it telling us now?
Well, that's a really good question, of course, Kerry. I think that what we're seeing is obviously the start of a potential significant bear market in stocks. And I say, we might be seeing that because I don't think it's, when you get these like mega bear markets, 40 or 50% bear markets, they take a lot of time to play out. And I was looking at, what happened in, 2000 to 2002, 2008, 1974, for example, or 1973. And, those markets, they really didn't fall apart until like the 8th, 9th, or 10th month into them. We're potentially only 5 months into this. So we're setting up for a potential bounce. And even in the scenario where we're going to have a 40% bear market, like we're setting up for a good bounce in the S&P. And so I think, this could be like potentially the first leg down, or, it could just be a, 20 or 25% decline. And, potentially the recession is going to get pushed out. I say potentially because we never know. Potentially could get pushed out by even a year or two or a few years if the Fed completely reverses policy and Congress decides, both sides of the aisle decide, okay, we need to spend money again because we're more concerned about growth now. I think in that kind of scenario, you could see, potentially another move higher in not necessarily all stocks, but potentially commodities. So that's why you say, or what's happening, with what's going on here. It's hard to say because we don't know for sure if this is going to be a start of a mega bear market, or if this is just going to be like 2018 where there was a 20% correction, they shifted policy, and so we got a few more years of growth, or maybe it could be something in between. So I don't mean to be scatterbrained here, but it's not clear to me, which of those scenarios we're going to take. I mean, with respect to gold and precious metals, gold's outperforming basically everything now except oil. I mean, gold against the stock market, it's above the 200-day moving average. That ratio, that 200-day moving average, is sloping to the upside. So if we're looking under the surface, gold is in a really good spot. And I don't know if I said it the last time we discussed, but it's even something I've been thinking about the last couple of months. And even though I was not expecting, I was more bullish in not expecting a real severe correction in precious metals in the last couple of months, I should say. My view since then has been, we're going to get the breakout when the Fed shifts policy. And I still strongly believe that. I mean, it's pretty clear to me. Inflation has gone from 1% to 8%, and during the period when that happened, gold and silver weren't able to make a new high. Even copper only made a false new high, which is interesting. So if you look at that, even copper did not make much of a move during this huge inflationary period. And real interest rates. If you look at how the market looks at real interest rates, looking at the yield on tips versus the yield on nominal treasury securities, that bottomed a year ago, and that's been going up, and that's been in the last like 5 or 6 months, that's been rising really sharply, other than the period when like the when Russia invaded and the month after that. So other than that, real interest rates have been moving up sharply. The dollar's been moving up sharply. So these things are negative in a short-term sense for gold, but gold's outperforming the stock market. It's pretty much outperforming everything except oil, and oil is it's like 40% of these commodity baskets. So that's really the next thing to look for when we see gold against oil or gold against the CRB. When those things turn in gold's favor, gold's going to be going up against everything. And at the same time, I just think it's a matter of time before the Fed has to shift policy. They probably want to try and get in a few more hikes. But if we're looking at, the S&P is down to 3,900, there's, people are thinking the Fed is going to have to stop at 36, 37, or 3,800. If you could look at high yield spreads, those are starting to get to worrisome levels. So I don't think the Fed is going to be able to do that much more tightening. And at the same time, a real signal for precious metals, Kerry, will be bonds and bonds turning. And so we're starting to see a rally in bonds. It looks like they bottomed 3 or 4 days ago. So they're rallying a little bit. So that's really going to be, I think, the first tell for precious metals is if we see, bond yields start to come down, whether you're looking at short or long term, if they fall below the 50-day moving average, that could be the first signal, because the Fed follows the market. So if the 2-year rolls over, the Fed, that's going to be a sign, okay, we're going to have to stop our hikes. And so the first signals of that are, going to see bond market strength. And I think we're just in the last couple of days, we're just starting to see that. That's the first signal. The second signal will probably be the Fed is talking about, well, we can only hike 25 now, and then after that, they're probably going to have to stop. And at that point, gold will have already bottomed, and then if problems really seep in after that, that's when the Fed is going to have to completely reverse course and cut rates. And that's when gold's going to break out, in my opinion. So I know that's a mouthful. There's there's any number of tangents there to go off of, but that's how I see the situation right now. Technically for gold, last thing, there's a lot of support, 1830, 1835. So I know we're going through that. So we're kind of in a liquidation. But the next level for me is around 1780. So there's a lot of support in that area. And silver has broken down. Silver has really strong support around 1875. So I think silver is going to test that level. It has broken down now. But the last thing on silver, Kerry, the last 3 times silver declined 9 days in a row. Let me look at these dates, or let me think if I could recall. The first time was September 2008. The second time was November 2015. The third time was March 2020. So the other 3 times when silver has had declined 9 days in a row, basically weeks later, you were into a very significant bottom in silver where it made a huge move higher over the next 6 to 9 months. So I think, if you tell me the Fed is going to be cutting rates by the end of the year, I would say, okay, silver is coming into a major low here in the next couple of weeks.
Hey, I agree with a lot of what you're saying. I go back to the the traditional Dow theory, and that is that when there's what they would call an intermediate reversal of the trend, where if you're in a bull market, everything turns bearish. If you're in a bear market, everything turns bullish. It's very violent, volatile, and very quick. And oftentimes the experts, everybody says it's the start of a new bear market, which is what they're saying now. And the fact is, a 15 or 20% retracement, even 100% going back to the last turn of the market, used to not be unusual. But in our current environment, Jordan, we haven't seen these violent corrections. 10, 12%, they last a week or two, and then the bull is raging onward. So I think many of you out there wouldn't even know a bear market if it hit you in the head, if you will.
Right. And I mean, the S&P is, I think it's probably down about 20% now, but I mean, a lot of stocks, a lot of companies are down more than 20% down.
Sure.
Tech stocks, especially. I mean, I forget what the stats are. I mean, I apologize for not having them off the top of my head, but I mean, it has been a bear market for numerous stocks. And I mean, there have been stocks that have been holding up really well, like Tesla, but that's starting to crack. So I'm not like going back to my first answer. It's not clear to me which road we're going to take, but I do think that the Fed is if we're looking at how things are going over the next few months, the Fed is probably going to have to shift policy. I mean, gold's already outperforming the stock market, so we know gold is going to move first, and then everything in precious metals are probably going to follow. So the worse it gets for I know this sounds like counterintuitive to gold people. The worse it gets for the stock market, the better. I mean, it's something I've been saying for the last year or so. Well, gold is not going to have this huge breakout without trouble in the stock market and the economy. Well, we have that. And I know it really hurts right now because silver and juniors and exploration stocks, they're getting killed. But what's happening, especially in the stock market, I mean, this is absolutely necessary for us to have the start of a real bull market in precious metals, not just where it does a moonshot for 3 months and that's it. Like a real bull market where it's going to be at least a couple of years where gold breaks out and it trends up consistently for months and months. Like that is only going to happen with what's going on here now, which is trouble in the economy, trouble in the stock market. Real interest rates are going to have, I said they've been rebounding. They're going to have to go down again when the Fed shifts and eases policy. And, the technical setup for gold is so beautiful because when it starts moving and it breaks out of, monthly close above 2,000 or 2,100, weekly close above 2,000. When that happens, that's going to be the all go signal for precious metals. I thought that was going to be 1,900, a couple months ago. I mean, we talked about it on your show.
Sure.
But I was wrong about that. I have to admit, I was wrong. It wasn't 1,900. It's clear now. It's going to be 2,000 or 2,050, depending on what chart you're looking at. And I think, a big reason for that is inflation. Honestly, I mean, the costs are up for everybody, for gold producers, even, exploration, getting assays, all these things is more expensive. And so, it was easy to say, well, 2 years ago, 1,900 was the key level. Because of inflation, it's now, 2,000 or 2,100. But that's really, when we see that go and gold take that out, to me, that is when we're going to see money is going to start to flow into everything. So yes, this is really painful right now, but we are setting up for a huge move higher in a real bull market, something we haven't seen for a number of years.
Yeah, I agree with you. And just that, we've seen this type of thing happen before. And look, if the, God willing, the Russia-Ukraine war ends in a week, what will that do to the market? It'll be happy days are here again, right? And my gut feeling is I know it's hard to believe, we're probably getting closer to a resolution on it.
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita copper-gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
Well, hopefully. I mean, I just hope for everyone's sake, but the market's really over the stock market. I mean, everything's really oversold. We're already seeing bonds rally, but bonds in the stock market and gold have kind of been selling off together. So bonds are starting to rally. We'll probably see, gold and the stock market rally together here at first, over the probably, potentially until the summer. They're setting up for an oversold rebound, and then after that, it will get interesting. later in the year, if the stock market rolls over again. I think if that happens, either way, if it's able to rally and hold it, or whether it rolls over, either way is going to be really bullish for gold, because I think the Fed is going to have to shift policy. I think it's not going to take that much more for the Fed, or at least it's not going to take that much more for the average person and for the market to be more concerned about growth than inflation. I mean, that's part of the problem for gold recently, is that the number one issue in the country is inflation. I mean, everybody wants that down. And so that's what, the White House is obviously telling the Fed, we need to get this inflation down, and that's bad for gold in the interim. However, we're starting to see cracks. I mean, the stock market is one, high yield bond spreads are another. Some economic data is going to come in really soft probably in the coming months. And so after those things happen, people are going to become more concerned about growth. And, when that becomes the issue, then the Fed can shift policy. And I said earlier how I think the early signs of that are going to be, we're only going to hike 25 instead of 50. Like, we already saw it, because the market was pricing in, I think, a 75 this meeting or the next meeting. And they said, we're not going to do that. We're only going to do 50. Well, the next thing is going to be, we're only going to hike 25. We're not going to hike 50. We'll just keep hiking. And then suddenly they're going to have to stop. And I saw someone tweeted about this, but the last hike in these cycles, they never expect it to be the last hike when it happens. Mm-hmm. I mean, they were hiking, the 2-year yield peaked. The 2-year yield peaked like months before the last hike they did in December 2018. I mean, it was obvious a month before that hike, they're going to have to shift policy. They're the Fed, they're the last ones to know. So it's possible. We don't know. It's possible they could do 50 this next meeting, and that could be the last one. They could do 25, and then they might just do 25 again in July, but that could be the last one. So, the market is not, I did see after the last decision, the market scaled back its hike expectations in the long run a little bit, but I just think that's going to be something to look for over the next meeting or two. And that's going to, that will coincide with precious metals rebounding, in my opinion.
Yeah, I'm inclined to agree with you there, because the majority of investors are always wrong. That's the one thing I've learned. And you could be wrong as a contrarian as well. But if you're following the crowd's always wrong. That's the way the system is set up. That's the way it's designed. Always works that way. So you're in a situation, you lost a fortune on your mining stock portfolio. I'm sure if you're like me, you're down quite a bit. You're holding on, doubling up, adding positions. What do you do?
Well, I think, I wrote about this a month or so ago, at least in my premium updates. One way to reduce your risk is to be a better stock picker. And, having gone through a lot of these vicious sell-offs, you want to assess the companies that you own. And, this is very difficult because not everyone's a professional, but you want to make sure you own the stocks that are going to make big moves when the market really turns. And I'm not necessarily saying like optionality plays when gold is at 3,000. We're talking about when gold rallies from, 1780 to back to 2000 or whatever it does. I mean, you want to own the stocks that are going to make the biggest moves the soonest and really have potential to, 3x, 5x, 7x your money if gold breaks out and goes to 3,000, which I think it's going to do. And for me, that's at first, that's going to be growth-oriented producers. So we're looking at junior producers that have growth potential, or developers that have, great projects that they're going to put in production that have potential to scale. So I think for me, those types of stocks are going to get the capital first when we rebound. And later on, it's going to be more so silver and exploration plays. So I have not traded this move that well over the last month or so. And I wasn't really expecting it. But I was telling people, one way to reduce your risk is to focus more on those growth-oriented producers instead of things like silver and exploration companies. So those companies are really going to lag. I'm not saying those won't bottom and recover, but those would be the ones that I would want to buy first, or I would add to your favorite positions, the ones that you're most confident that are going to rebound. When gold rebounds by $100 or $200, those are the ones that I think you want to add to first. And then, when you get this, and again, this is a mistake I made because I was thinking, okay, we're above 1900, got a couple monthly closes. We closed the quarter. We had a bull market breadth signal in the miners a month or so ago. So I was thinking, okay, we're all in the clear. I could buy some more risky stuff. But I was wrong about that. Stuff is getting hit. And so, those types of things, which I'm not saying everything is in this group, but it's mostly silver stocks and exploration stocks. You can wait on those stocks and wait till gold gets back above 2000. Like you're not going to miss a lot. So that's kind of that's my view on those things. I would be, to say it again, I'd be adding to your favorite companies, the ones you're most confident are going to do the best. And for me, that's growth-oriented producers. I would add to those first, and then the things that are more risky, like silver or explorers, you can add to those later on. Unless, of course, unless there's something you really, really like, it's really bombed out, then just buy a little bit. Like we're getting really oversold right now. The next day or two, this is going to be a time to add, probably to buy, to be honest. And, you don't have to put 100% of your cash in tomorrow. You can, buy a third of what you want. And then, a month later, you could buy another third. And then if we get a, confirmation later in the year, you can add to it again. So that's how I would play that.
All right. Well, that's interesting. And the key is not to panic. Keep your head about you, keep your wits about you, because all booms end with a bust, and all busts end with a boom. So you need to be prepared, and not panicking is the key. Obviously, if you've got some profits in something and you still have profits, it might be a good time to take some so you can reallocate cash later on. Well, in any event, I know you got a lot more to say about this in the Daily Gold. So go to thedailygold.com, sign up for a subscription with Jordan, read his market updates. Very valuable. If you got a question for Jordan, shoot me an email, kl@kerrylutz.com. And if you're at the site, financialsurvivalnetwork.com, just go and sign up for your free newsletter. Jordan, always a pleasure. Really appreciate you coming on, sharing your market wisdom with us.
Hey, Kerry, thank you so much for having me. Really appreciate it.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.